Hey everybody, great to be back here with you for Market and Sectors. My name is Mike Fairburn. Appreciate the coaches filling in for the last couple of weeks as I was out, had a cold last week, but it's great to be back with you all today. Planning to look at in terms of the market, just getting a good sense of what's going on with breadth. I want to look at different, of course, what we always do, markets and sector analysis. Very important to look at both of those and seeing what we're getting on a more minute level. I want to look at even some industries today, which we haven't done in quite a while. But there are some industries showing additional, I should say, highlighted strength, and on the flip side, some highlighted weakness, of course. So we'll take a look at that today with you all. Welcome. We do have a good friend of mine, Ben Watson, 20-year veteran in the markets here with us today. Folks, any questions, comments you have, definitely throw those in the chat so we can check those out for you throughout the presentation. But hello to you, Ken. Great to have you here. Riceberg as well. We've got Luke. Life of the Fast Lane, Ocean Life, Will, BJ, and Chris B. Will, great to have you on board. Folks, let's go ahead and dive on into things to get it going, to see if we can make sense of all this volatility in the market. More sense, I'll say. So with that, let's go ahead and hit some disclosures. Information provided here is for general information purposes only. Now, Schwab does not recommend the use of technical analysis as a sole means of investment research. Paper money software application is for educational purposes only. Investing involves risk, including for some products more than your initial investment. Futures and futures options trading does involve substantial risk. It's not suitable for all investors. You can see some additional details on that listed below. All right. Past performance is no guarantee of future results. And there you have it. Let's go ahead and I'm just going to pull this on down. And I think we're all set and ready to go. So let's share with the big screen and kind of go from there. Oh, plenty of Fibonacci lines in place. Wanted to pull those Fib lines up. Folks, you remember that we had a fairly big bounce coming off of this market low right over here. Well, we know where the low's at, but yeah, it's right along those two lines. There's a dual Fibonacci point listed there. Sometimes you will get these culminations or sort of a grouping of Fibonacci's. And I'm talking, maybe the 38.2, the 50, the 61.8. We have the 50 and the 61.8 here on a weekly chart, and that happened to come up just right at that low. Now, watching that could have been interesting. I'm sure that there were some traders probably looking at that and looking at the bounce. I did actually a ThinkScript class on this discussion, and we talked about watching the RSI when it comes off that level. It did come off that level, the oversold level, and it did bounce higher. It is currently residing where some traders will look for it to be in a more bullish situation, and that is greater than 50. You can see that right there. There is 50. It's 52 right now. Will we hold that level? It is interesting that we are holding it actually right now, because as you can see on this chart, sticking with our fibs for just a moment more, as we compare the fib from the top level to the bottom, the 50%, oftentimes some of the bigger numbers right there, 50%, 61.8, 38.2, bigger in terms of that's what a lot of traders will look for. But look at that 50 lining up. Wow, does that anchor pretty good? Really good, actually, off that bottom. We'll see what happens, but you can see right there that prior low again. And then what do? When we gap down on those reciprocal tariff news right there, I had to kind of swing this around to show you that arrow, but that was a gap exactly to that 50% level. So could 50% perhaps be an area that some traders might want to look at? Yeah, it anchors. It anchors pretty well. We don't get too much drawing it in the past here, but boy, we're looking at what's happened in 2025 over here. What have we done more recently at that point? Well, we're going to zoom in actually a little bit more to show you this, because the beauty of this is once you have the Fibonacci levels on a daily chart, well, we can see them on an intraday chart real easy. I'm going to go to my 10, 30, and 5. Let's do it right now. Let's pull it up, and here's our SPX. All right, let's just click over. Just a cool way to have this set up. Look at that. That's your 50% level on the daily chart. The daily chart. Look at some of these gaps that we were talking about. That's the support bounce right off there. That's your gap down at 50. And you came very, very close here as well. This is not just D. We'll put in daily in there. It is, in fact, the daily chart Fibonacci that we pulled up, but let's roll that line through here. Wow, we gapped even down to that again. We came up here again. One of the key points I'd want to state on this, what are we doing at that 50 right now? We are holding near that 50% level. All else equal, folks, that you have to say, at least for now, is a positive. We'll see what happens. And we know from day to day, anything can happen in this market with the news, etc. But take a look at that. This line drawn through there, a very interesting point. I'm going to highlight this just in case you don't have these lines up. That is 5,500. Now, some ways that traders would look at this for additional confirmation, if we can break above the 61.8, then it's much, much more likely, according to a lot of traders, that we won't do this. We won't come back down. What is more likely is what they'll say in a lot of their research, and I've read that for years, but is they'll say that if you can get above, kind of a double little bottom there too, if you can get above that 61.8, then there's just much more likely that there could be a continuation of the trend. It's very, very interesting to see. You can see I have another support level that comes in here at that 56.60 level. But if I was to point to a number right here at an upper confirmation point for some traders to see if it's going to be more bullish, it's going to be about 56.50. It's right between 56 and 5,700 is where that resides right there. Okay, on the flip side, because we need to look at the flip side as well, what about the lower fib? If we hit that 50 and we start to break below that 38.2, using Fibonacci's as a guide, that could spell potentially more weakness coming down here, because it didn't get above the 61.8. But it's so fascinating because we're sitting right here. I'm going to clear everything off and just show you that's sitting, kind of operating at a support level too. So hopefully those levels can give you some understanding. I think it is helpful to look at a more minute level, which we do in this class, just to see what has been happening. You can see here, though, from a daily chart, yeah, we've been bouncing around for a few days. We don't get nearly the amount of data, though. When we're looking at a 30-minute, my gosh, a 5-minute chart, you get tons of data, right? But now you can really see that it was still respecting that 50% level, even on a minute 30 number here. Okay, all right. So that's what we're looking at. By the way, that 56.60 number, that little diagonal, or I should say that dotted line right here, that is just above the 61.8. So, and what I've been looking at is I've thrown this on here is just the possibility of, hey, it's kind of like resistance as well. When I say I'm sure I'm not the only one, but there is a little bit of resistance there. And I've put this level in place because that was a major high over here. That was a major high. We jumped up above it. We held that support. And from this point, we had a pretty big rally to the upside. Okay. So when I say I just bring this up because that's what I talk about each week in these classes that we discuss paper money. But you guys get the general sense that they are very close. One is just more kind of geared toward, obviously, Fibonacci, the 61.8, and one is more geared towards what have we been seeing on the chart. Okay, I want to do this too. Let's go back to our weekly, just so we can get a bigger kind of sort of glance at that. Here is our SPX on a weekly now. The Fibonacci's that I was bringing up to you all, those are right over here. So the Fibonacci right here, off of this point to this point, you're going to get a 50% right there. Off the next major level before we really took off, a lot of times traders will put another Fibonacci in from this low to this high. And with that, you're going to get the 61.8 pullback. Okay, but they came at basically the same level, which, by the way, was exactly or very, very close to a major high here. So it is interesting. If you take a little bit of additional time, you can find all these additional points out there. But that's what we like to discuss in this markets and sectors class, because getting a general sense of where the market might be heading can really help us know, are we going to be bullish or bearish, what to look for? Because we are talking about 500 companies here. The markets are moving in a certain way. You can believe that a lot of the companies out there are moving with it too. All right. So having said that, let's go ahead. I want to stick to I want to just take a look at, well, let's go back to our daily for a moment. I'm going to take this. Now, I might as well just keep the fib on just for now, but we've also been seeing a number of companies out there in the market, and what we've been seeing, a number of stocks, they've been recently breaking above these longer term moving averages. Let's pull up some of those right now so we can just take a quick peek at them. I'm just going to use, first of all, a couple of those just as a reference point, and then we'll kind of take a look at each of them as we go through looking at the NDX and others, making some comparisons. But one of the first ones I wanted to look at was the 100. We can leave that at a width of 3. I'm going to do another one here. We'll go ahead and choose the 200-day moving average. 200. Let's change that color a little bit. There we go. Well, let's make it gold. All right. Fair enough. And so here's our 100 and here's our 200. We're not quite there. Notice they're coming just above this resistance level. And we have broken below that point. So a lot of times, until we actually get above this point, these two lines, a lot of traders out there won't really look at the market as being bullish. Now, there are some sectors, some industries. We're going to take a look at that in just a bit. But the next point is that, if you can get above the 61.8, that's going to be obviously your best chance to try to retake some of those longer term moving averages as well. Keeping that on the chart, how does everything stand up here to that? Let's go ahead and look at the NDX. Very, very close. It's a very, very similar type pattern. You're going to see in here, general theme, we have all been down, we've been down across the board. Let's see, dollar sign, take a look at the Dow real quick, dollar sign DJI. One of the stranger symbols out there, it's got the dollar sign in there, even though it is still a market sector. You can see quite a ways away, and trends are still down. Lower lows and lower highs. We don't even have a higher, even on a short-term basis, a higher low on the Dow. So last but not least, let's look at the rut. And folks, do you see the downward trend? So obvious on this, right? Clearly lower lows and lower highs. This has really been leading the way. But sometimes out of the gates, this is why traders will look at it. Out of the gates, this will be the first to really start to break new highs and to go up quicker. We're not seeing that right now. So still some weakness in the rut. Okay. Wanted to hit a few of those. The one moving average crossover that is interesting, I'm going to go ahead and put this up on a style here for us. I've saved this style. Let me just load it up. It's the 5 and 21 EMA crossover. And, oh, it didn't go. Why is that? It's not going. Evidently, it didn't want to save. That's okay. Let's just flip these right now. And I'm going to change them. But what the 5 and 21, the 5 and 21 exponential moving average can do is oftentimes it can signify the initial changes of a trend. You want to see if the trend is actually going to flip after all. But I want to highlight this. Let's just go, we'll go to a 2 here and then a 4 on the other. Fine, here is the, hopefully I said that right, the 9 and the 21. That's what we're looking at here, the 9 and the 21. Let me show it to you right there. When did we first get the 9 and 21 crossover? It's right there, just barely. We just barely saw it. So you'll oftentimes see that 9 period exponential. It's an exponential, so more weight is towards the more recent time. But do you see that just crossed over here? Now that might be holding at the 50% level right now, a positive 50% fib that we looked at right over here, a positive because in a lot of cases you will see that be one of the first indications of an early change in trend. We actually did see that early change in trend in this sense. On a short-term basis, higher highs and higher lows right there. Just barely. Do you see it? Higher highs, higher lows, and then you get the crossover. Will that signify a change? A lot of times, if we're looking at, let's say, a company, like here's one we did a swing trade on yesterday, but you'll notice over here that This was a kind of a longer term pullback on Kroger. Some of these consumer non-discretionaries have really seen some strength as of late. Where'd you get your cross? Right there. Early potential change in trend. Go through and take a look at these, folks. Don't trust me, but we're looking at a 1 week moving average on an exponential basis. That's 5 days. 5 days relative. I did the 9. I'm sorry. I've been doing 9s versus 21s. It's actually the 5 and 21. I want to flip that over. I go back and forth between the two. This right here is the 9. Sorry, I look at a 1 week and I look at a 1 month. And not just me, but this is something that a lot of traders have done. I'm going to show you the 5, and the 5 holds very well as well, but it's a little bit earlier, a little bit early signal sometimes. Sorry. I use those two interchangeably, the 921 and the 521. But here is your 521. You're still getting that crossover. There was a little bit of a dip here, but you can see, generally speaking, that 5 will tend to hold above the 21 if the trend stays up. Now, the point is, I had to use this consumer non-discretionary because this is where a lot of the trends have been going higher, right? That is an uptrend. But now looking at the market, the signal came, like I said, maybe a couple days earlier or a day earlier there. But there you go. The 521 crossover. It's the 521 right there. So there's your break. There's that longer term resistance. These could be positives. All right. Before I go too far into this, before we go into sectors, markets and sectors, I want to look at the ES for futures. And the reason is because we get volume right over here. Volume's been kind of weak with the futures contract itself. Okay, let's clear that off. I'm going to show you that arrow is pointing to something. Just going to leave it there. It's going to be the volume profile. This is the biggest volume over the entire year. It's coming in virtually right where we're at now. So if you look at all the volume on the entire year, that's where we stand. Look at that. See, still pointing to it. Now, I sent a tweet out on this, or an X post, but you can see that is the point of control right there in red. That means that for the entire last year, all of last year, if you add up all this volume at the prices that it came in at, it's coming in at right where we're at. What's interesting is we're just slightly above that level. So using the futures as a guide, this could play into what the S&P 500 index could do as well, because sometimes the futures will lead, and oftentimes it does lead the underlying index. But notice you got that prior high here. Notice that was the longer term, what did we say, 50% level on the SPX? We're right there. Now, this can mean a couple things. The fact that we're above it, and just slightly above it, and kind of holding in this range is a positive. That's a positive because you have a lot of trading activity here. You can see the major spike. That red line does indicate the point of control, so it's the biggest volume. And what that's creating here for us is the biggest spike out of the entire year. So resistance if you can't get above it, support if you can get above it. We could drag here for a little bit. Okay, so tie that in with the other points that we've made about support, looking at that previously on the SPX, those intraday charts as well with Fibonacci. The next thing I wanted to highlight over here is notice that you get this major dip in the volume profile until you come all the way back in a U-shaped format until you get back to prior highs, where the next level, the second highest amount of volume came in, which kind of stands to reason. We tried to hit above there many times. There was a lot of buying and a lot of selling pressure there. We're below that level, so I'm just going to go ahead and label this right now. The trader would say that's more likely resistance. Of course, we're getting confirmation of that at the top. What this tells us, though, is if we can break above the upper level on this ES, according to the volume profile, right there. You see where that last spike occurs? Just like we were looking at, just above like 5,500 or so on the SPX, roughly. If we can get above that, it might be for some easier price movement until we get to this top. That's what that reduction in volume shows us. It just might be easier sledding going higher to break those other resistance levels. And then we kind of have to wait to see what happens there. But I think it would be fascinating if we could break higher and take out the 200-day moving average. Okay, that's on the technical side. That was a lot. That's a lot of technicals there, but there are a few things going on. But it's interesting how it's kind of isolating right around some of these key levels on the chart. So we got to keep tabs on that for sure as we look through this. All right, money flow, by the way, down here, since we do have volume, I want to tap into money flow, which gives us accumulation of buyers relative to sellers. How are we doing on money flow? Well, we did recover back up, and I will say this. This is how you can use money flow as an early signal, just looking at volume. In fact, I'll take the profile off for now, and we're going to highlight this. Go down here, and you can use, actually, I'll just use the drawing tools that I've got. Do you see this last major high right there? Right there in price. We've got a lot of yellow lines. Let's go with the blue line. Okay, so right here, that high right there. Look how that lines up with your money flow right there. It made a high to that point. Look where we're at now. If we draw a line, where's money flow at? It's about right where we were. It's equivalent, but look at where price is. So what that tells us is to get the amount of buyers to this price point for the money flow gauge, we came to this high. But look where we're at now in relative to price. We are what, about a little over 200 points below that level right now, 5,600 range. That's 5,800 range. That tells us that we have enough buying relative to selling according to money flow. We should actually be around 5,800, but we're not. So there could be some short-term mispricing here that could also tie into the volume profile. If we can break up higher, maybe get above that 61.8 Fibonacci that we'd looked at on the SPX, well, we could start to run and maybe hit up towards these prior highs. Now, where are those prior highs? And by the way, that money flow tells us if you can take out that level in money flow. So if over the next few days, if we begin to inch higher over here, money flow, according to money flow, we will take out that level. Now, what is that level on the SPX? You can use these interchangeably, because they do come very close, but it would be right around this level. It would take out that high, and then we might have on an intermediate term basis a longer term trend reversal possibly, question mark. We'll see. But that's what could happen, and there are some interesting setups for this to unfold. Now, my next thing is what happens if there's more bad tariff news or whatever? The tariff news could be positive too. In fact, I think you could say, hey, if there was an inking of an agreement with China, and they say, okay, we're going to take better terms for the U.S., maybe make it a little bit more level playing field, which is what the U.S. is shooting for with all these countries. That would be good for the U.S. And I mean, think about it. Could that spike the market? It could. I think that's what they're looking for over those 90 days of negotiations out of the non-reciprocal tariffs, taking those off. But that is an interesting thing to keep in mind. That's on the positive side. If there was a negative side, well, the news flow could dictate a lot of what we're going to see here. But these lines here, these Fibonacci levels, can still help us get a sense of, hey, if we break above 61.8, maybe the news flow is positive. If we break below the 38.2, maybe it's negative, and that could still line up. A negative news flow could line up with everything we just discussed on the chart. We could see a downward move or an upward move as well. So it's going to be very interesting, but right now we're just kind of holding, aren't we, at 50%? Yes, bring in those elephants. There we go. And by the way, the money flow, yeah. And so, but sure, I mean, this is cool because we don't have money flow on the SPX, but you can use the futures contract to help with that. That's what I love in this class, where I could just go through the futures in more detail. All right, perfect. So we got a few things there. Let's move right on over now. We've made it. Let's get into our market sector review. And, oh, wow, what's happening here? It's almost as if that got messed up. It did. What on earth? Okay. That's not my market and sector review. Ouch. Okay. Um, have not had that happen before, and I've realized a few things are a little bit messed up, but oh, it was working yesterday. Sector grid? Oh, no, I'm sorry. It does work. I've got to go forward. It's the same one. We're good. We're good. We're good. Duh. My mistake. I wanted to look at this right now. So, looking at markets and sectors specifically, the consumer staples remain strong. I sent out an X post today on that specifically. It's the leader of the day, and so too is healthcare. Folks, you guys know in this class we've been talking about consumer staples and healthcare for a little bit now. Both defensive in nature, they were the only ones positive on the day. Everything else has kind of been a little bit lagging, as you can see here. But a quick note on the consumer staples, we're not quite to what I wanted to look at. I'm going to go full screen or a full chart to show you this. Let's highlight this. Right click, maximize sell. Wanted to highlight this. Taking a look at it on a 3-month chart, this could be setting up, it's sort of inverse head and shoulders-ish. Shoulder, head, shoulder, a little bit higher. I've seen those. What I think kind of gives it away a little bit is the neckline. The neckline's pretty flat, and a lot of times that's what you're going to get on these inverted head and shoulders, or a head and shoulder pattern itself. You get that neckline that's holding pretty well along prior highs. And so, in fact, if we take out this headline, what is the target for the consumer staples sector? Now, we're looking at all stocks within the S&P 500 that fall into that kind of that non-cyclical type group, non-discretionary group, more of like the necessities, right? These have been holding up very well under the tariff situation. I showed you Kroger earlier. Kroger, if you think about it, if you go into Kroger, a lot of the food in Kroger is from the US. That's one of our strengths, is right, like food. It's not coming from China, for example, right? And so there's less of an impact. It's a defensive sector, and it's forming some of the stronger scenarios setups over here. The pattern, the price target on something like this could be take this high to this low. And then remember, looking at all stocks collectively here. And then if we were to break above that level, we would have, I'm going to need to adjust this. I think we would go a little bit higher than our chart would. Yeah. Okay. You know what? It's going to be up. What is this range off this bottom? If I can get my right. There we go. My right tools. There we go. It's going to be, that's about 80 points, a little over 80 points. And so if I click on this and then duplicate it and just pull it up to get my price target, that's what we'll be looking at for an inverted head and shoulders pattern. Folks, that's a breakout. That's a breakout, clearly. And that's a decent sized run, as you can see right from there. So it's, got it to 1,000 or so. We don't know if that's going to happen, but it's been holding very, very well over here under the tariff situation. All right, let's jump back. But that's what you've got. You got healthcare as well. I will say this about technology, infotech, and communication services. If the economy can rebound, if we get a rebound in the economy, a tech-weighted sector, the NDX, could be actually really quite strong here. A lot of times technology stocks and the growth stocks will recover very, very quickly if you start to see good, strong economic conditions beginning to unfold. If that's the case, these can really show some strength. So based upon the news that we're getting, the news flow, whatever that cycle dictates, these could recover very sharply. And what do we have within that group? Well, you've got like the Mag 7 to keep eyes on. So based upon that news, here's Apple. Okay, there's a trend line breaking already. Here's Meta. Not doing so great. What else do we have? NVIDIA. Kind of just dragging towards the bottom. And Amazon, we'll just go through those right there. So kind of similar. We really haven't had a big change in the news, but we'll see what happens to keep that in mind. By the way, conversely, what would happen to the consumer sector, the consumer staples sector? It would probably go down on that news. So keep that in mind. We've been doing swing trades, paper swing trades on this one for a while now in that class, but it just continues. And we've looked at some others. Like, for example, here is Coca-Cola, another one we did a swing trade on. the Tuesday class, which is the Coca-Cola Euro Pacific. So you're getting a little bit of the Eurozone, but you're also getting the consumer staple side as well. So just to let you know, that still falls in the consumer staples as an example here. All right. So let's go back now, and I want to take a look and show you guys this other area in the Market Watch tab. Now, as I come in the Market Watch tab, you can also drill down not just to the sector level, you can go industry level as well, like right there. So now you're getting a whole basket of companies, groups, outside of the 11 sectors. That's the next level. This is a really interesting way too, just to see what has been moving on the day or on the week or over the past 10 days. I'm going to pull this over here. That is a ThinkScript. ThinkScripts aren't guaranteed for timeliness or accuracy, but as long as the data that's coming into the platform is solid, then what you'll get is that data also looking good. I mean, managed healthcare, look at this. What's been doing well? Healthcare sector's actually been doing okay. What's been dragging down the healthcare sector? Right there, managed healthcare, which is one of the groups. You've got pharmaceuticals, you've got biotech, you've got life sciences, you've got medical devices, and then of course you've got managed healthcare. I think you've got the total of 5 in there. You can come down here and take a look at. Actually, I can just point it out here. These have not been doing so great. If you take this out, healthcare is very interesting, and there are ETFs. You know, maybe not interested in something like this is down so much, but there are ETFs for those other groups. For example, biotech, pharmaceuticals, medical devices, right? Very interesting to see what's been happening over the past 10 days. So these are some of the losers. Let's just see what some of the winners are right there. Leisure products. That is a consumer discretionary, but leisure products have actually been doing very, very well over the past 10 days. We can look at it on a day-to-day basis as well, but come through here and take a look at some of these. Yeah, pharmaceuticals are in there. So, and that's part of healthcare. That's what's keeping healthcare strong. Now, if you guys ever wanted to just take out the sectors and just look at the industries only, you know you can do that. We can actually use the scan tab to isolate just the industries themselves and find that strength. Let me show you how. Go right into the scan tab. We want to make sure next we're in the stock hacker right here. And let's scoot on over into, let's choose health. Well, we can choose healthcare. Go down to industry. Actually, let me do this. Sorry, I was thinking about something else. Let's do this one. I'm going to go over here. We're going to take sectors and industries first. So this combines everything, just like we saw in the Market Watch tab. It's going to show everything we've got. But if we wanted to take out sectors, we could exclude it. So we're just looking at industries only and seeing what is moving in that group. You can always compare sectors later. But if we exclude down here now, what are we going to choose? We're going to choose the sector indices. Take them out. We've taken it out. And now, folks, you're only going to see, I got to kill that one. Sorry, I had a little script in there. You're only going to see 263 industries showing up. And we can see, by the way, what's kind of fun too, what's moving today, just today itself. There you go. Where's the strength at? Construction materials, building products. It's a sub-industry of, obviously, materials. You can see over here, if you wanted to know what sector it's in, we can list the sector over here. Oh, it's not listed the sector. That's okay. But you can see down here too. This is what's strong. All the industries are strong, and then you can see the weak ones below it. That's only, oh, you know what? Let's do all of these. Sorry, let me get this up. Show 200 going to do it? No, 500 will do it. There you go. We have a lot more that are actually strong. That was only listing 50. So I think that is all of them. Just clicking on that percent change, check that out. Now you can really see all of these companies, and there you got the losers coming in after that. Kind of something towards break even, scooting all the way down. Really, really helpful. Again, finding out, I mean, now you can isolate and find out what stocks are within these groups as well, right? You could easily do that too by doing the same thing. All right. So some cool stuff to take a look at, but it's coming down to just a couple of sectors, so I wanted to hit that. Let's go now into our market sector review. I was kind of confused because I was seeing the same chart, but what have we been seeing in terms of our advancers versus decliners? What does relative breadth show us? Breadth, I think, is a highlight here. Breadth, very, very good. We're getting more companies in terms of advancers relative to decliners in this last move back. In other words, a lot of companies collectively have been running up. Let's go ahead and just make it as big as we can so you can see that. There you go. Okay, we know the prior highs on the market. We're closer to those highs, but we're still a little over 200 points away. Well, we broke it. We had more advancers than decliners. So you're getting a larger basket of companies that are participating in the market. Why is that important? Because when you have more advancers than decliners, you have more market breadth, more participants out there. Remember, we're looking at the NYSE. So this is, in the thousands in terms of stocks that we're looking at now in the entire NYSE. And when that occurs, it can provide more strength of trend. And what is the trend recently? The trend is up. Short term, but that's what we're exploring here. It's a short-term move to the upside, as you saw on the chart. Higher highs and higher lows. It's short term, but we're looking at that time frame and saying, wow, that's pretty strong. So there could be some strength in trend here. Again, tons of this is going to be tied into the news flow, but that's been a very good bounce back across a number of different indicators. The one we were looking at a couple of weeks ago, because I was out last week, but we were saying, wouldn't it be interesting if the summation index of the McClellan oscillator could start giving us signs of maybe a longer term recovery? Boom, we got it right there. Now, does that mean it's going to go higher? No. No indicators are going to tell us it's going to go higher specifically, but that's a positive indication. You can see that the McClellan did run up over the 2 to 3 weeks after it got below -100 and then back up above -70, which we talked about in pretty good detail. We look at this one every week, and it did run up 2 to 3 weeks. That can also be an early signal. But that's a real early signal, right? That's like off the bottom. Okay, the next signals we talked about, well, like those moving averages. And then we can look at market breadth, money flow, volume, etc. Let's go forward here. See your breadth indication? It's actually, looking at the equal weight of the S&P 500 index. Yeah, not too bad. Big run up, pull back, right at resistance here, but actually a pretty good indication. In terms of a shorter term trend up, higher highs and higher lows. We'll see how that lines up. What we've been talking about in great detail is now we move into the weekly chart, because we did want to explore each of these on a weekly basis. A much longer term, summation index still down, kind of zigzagging on the McClellan oscillator, not really too many indications, but really focusing in on the Oman down here, the Hindenburg Oman spikes, and seeing if on the breakdown on a weekly chart, the trend breakdown, lower low, lower high, this lower high range right there. Look at all those Oman spikes, tons of them. That is such an interesting longer term indicator. And again, it gives us a good sense of 52-week new highs versus 52-week new lows. That's lows, this is highs. If you're getting a large number of lows relative to a large number of highs, you get the Oman spike. It can predict a fracturing of the market. And when you get a fracturing of the market, this is where you can get those big move down. This is a weekly chart. That's 3 months right there. We bounced back up. We came down another at least 2.5 months. That's a long move to the downside. Okay, and that's what we're watching, is on this recovery, are we getting any Oman spikes, folks? Thus far, we are getting nada. Not any, right there. Okay, all else equal, that's not a negative. It's going to show that we're not getting any, but that's a positive in terms of the Oman spikes as it stands right now. So it didn't happen. So a positive indication. One of the reasons why I would say it's also a positive indication is because we looked at the breadth and what were we getting? More advancers than decliners. By definition, if you're getting more advancers than decliners, if the AD line is up, more advancers over decliners, what does that tell us about 52-week new lows? 52 lows. It tells us that we're not getting as many, perhaps. And so watching that advanced decline line, I think, makes all the difference in the world. It could. Not just me. I'm just saying it's tied into these indicators. It makes all the difference in the world, perhaps, why we're not getting this. And so keeping it on the advanced decline line could be a big deal. So that was interesting. You guys been watching that? That's one I've kind of had my eyes on just to see how those two kind of came together. All right. Yeah, so we don't know if it's going to flip or not. These are just indications. We don't know if it's going to be positive or negative. You'd have to say that a lot of the news cycle is driving the markets right now. It's holding that 50% level, but yeah, I mean, if you start to break below the 50, go below the 38.2, you're going to get an early indication of potential weakness. We talked about the 61.8. It's just kind of holding that line right at that longer term volume profile for the entire year. We're right at that level. So we'll have to see what we get one way or the other. But I do have a feeling that the news cycle is going to, it could play a role. It could easily play a role. We'll see, though. I mean, it just seems like it's having such an impact every time you get an announcement, up or down. All right. Well, taking a look right now at 52-week new highs, that's been low. It has been really, really low. So we haven't been getting that on this price bounce. In other words, is that too surprising, though? Look how far away we were from our highs up here. Again, we're looking at the NYSE. Should we be getting new highs? Well, the index itself is a long ways away, so that could be a reason to justify why it is as low as it is. If we go over here and we just take this and we just take out the LOW instead of the HYH, there you go. So the lows aren't hitting either. Not too many signs right now on the new highs and the new lows. This is what we're looking at in terms of seasonality for the past 10 years. Our red line represents those 10 years, and our green line, or our cyan line, represents what's happened this year. And all we can say is that, yeah, it kind of bucked the trend over here for sure. You'd have to say that's all tariff related right there. Sometimes it can, even though it's on a different trajectory right now, it could come back and start to look like a seasonal pattern, but it doesn't have to. So sometimes traders will say, yeah, if it looks similar to this, maybe it's starting to look like a seasonal and we could project this. I still think, folks, it's going to come back down to the news cycle, but we did talk today about plenty of indicators so that you guys can keep your eyes on. We spent a lot of time here on that intraday chart as well. Okay. Well, that was a lot. That was a lot of stuff, but we were able to get it in within our 40 minutes. Folks, smash that like button. Do me a favor if you like today's presentation. It keeps the content coming up more currently for you. Be sure to subscribe. Thank you so much, as always, Ben Watson, for your help. And follow us on X, Ben Watson CS. Got to make sure you get the CS in there. All one word, Ben Watson CS, Mike Fairborn CS. We have a few stragglers out there, a few imposters. I've got at least, it's over 5 now that I've seen, and they're getting a lot of follows, and I'm afraid they're not following us, and I'd be the same with Ben, but Ben's got some great stuff on X if you want to follow us. But those are the actual handles, Ben Watson CS, Mike Fairborn CS. Folks, hopefully you found this informative and useful. Keep an eye on some of those Fibonacci's. I'll look forward to future discussions with you. Take care, all.